Hi students, O-Level Online presents the video lecture series for Basic Accounting. In this video, we will cover assets according to the syllabus. These video lectures are helpful for those students who are appearing in Cambridge O-Levels under CAIE either in June or November examinations for Accounting 7707. Let's begin the lesson number 1. Okay, what is account? Let's discuss. Account is a technical device which is used by the accountant to record increase or decrease in any item of assets, liabilities, capital, expense and revenue. Here we noted the words increase or decrease in the definition. We will remember them and will check its implementation later. Here a question come in my mind that what are assets, liabilities, capital, expense and revenue? These are 5 pillars of accounting. Let's discuss one by one in much detail. What is an asset? Resources owned by the business are called assets. It means all resources with an economic values that a business owns or controls with the expectation that it will provide the future benefits. There are two types of assets. Number one, current assets or current resource. Second one is fixed assets or fixed resource. Let's discuss one by one with examples. Current resources or current assets are that assets or resources which is utilized by the business normally in a year. Or it means that current assets are all the assets of a company that are expected to be sold or used as a result of a standard business operations within the year. Point should be noted, within a year. The first example in current assets is cash in hand or cash. It means the cash available for the business in the form of currency and it will utilize by the business within a year. Why cash in hand placed under current assets? Because the value of cash utilization going to change on daily basis in the business normally. That's why it is placed under current assets class. The second example in current assets is cash at bank. This is the cash available in the bank for business utilization under the company's name bank account. It requires a legal obligation to use it. Legal obligation means the submission or withdrawal of cash from the bank requires some legal documents like a check for withdrawal of money and deposit slip for submission of the cash into the bank. Further, we found changes in it within a year. It indicates that it will place under current asset classification. The third example in current assets is debtor or accounts receivable. A debtor is a person who owes money to a business for goods or services supplied. The fourth example in current assets is a stock or inventory. Stocks are goods in which the business normally deals that are held with the intention of resale. It may be finished goods or partly finished goods or raw materials. The fifth current assets example is office supplies. Supplies refers to the stationery, equipments and other consumable items regularly used in office. It is utilized within a year, that's why placed in current assets. The sixth current assets example is prepaid or advance. Business making advance payments for goods or services to be received in the future. It will also be utilized within a year, so it should be the part of current assets. Now we move on to fixed assets. Fixed resources or fixed assets are that assets or resources which is utilized by the business normally over a year. Let's have a look at its examples. The first fixed assets example is land. It is also called real property. It is the earth on which the company's office building or manufacturing facilities available. The second fixed assets example is premises and building. Premises refers to the building owned by the business. Building refers to a space from which the business is carried out. The third fixed assets example is furniture and fixtures. These are larger items of movable equipment that are used to furnish an office, like bookcases, chairs, desks, filing cabinets, and tables. The fourth fixed assets example is equipment. It includes copiers, computers, printers, fax machines, etc. The fifth fixed assets example is plant and equipment. It refers to heavy and light machinery used by the business to produce their goods and services. The sixth fixed assets example is motor vehicles. It includes the company's automobiles, trucks, and fleets used for commuting or transferring of goods or services by the business. The seventh fixed assets example is investments. An investment is a payment made to acquire the securities of other entities intending to earn a return. Okay, we have completed current assets and fixed assets discussion with examples. Now total assets are equal to current assets and fixed assets. This is the final result we perceived after this discussion. Thanks for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it, and please subscribe to my channel if you want to see more video like this. Thanks for watching. I'll see you in the next lesson.